Well, the Bank of Canada is expected to announce it is hiking its key interest rate again today.
Economists predict the central bank will increase the rate 3/4 of a percentage point as it tries to tackle soaring inflation. The bank hiked its interest rate 0.5 percentage point last month, bringing it to 1.5%. It has signaled a willingness to move in a more aggressive direction since then. Inflation hit a 39-year high of 7.7% in May, which is far above the bank's target of 2%.
LePage is cutting its home price forecast due to higher interest rates that are cooling demand. The realtor had been predicting home prices across Canada would rise 15% over the course of 2022, and with a 16.5% increase in the GTA. Its nationwide forecast now calls for the average price of a home to only rise about 5% by the fourth quarter. It also only expects to see prices in the GTA go up approximately 3%. The revised projections come after GTA home prices dropped for a fourth consecutive month in June. And with interest rates rising and housing prices cooling, how many homeowners and homebuyers are wondering what this will ultimately mean for them? Drew Donaldson is the founder and CEO and principal bank broker of Donaldson Capital, joining us live right now. Drew, good morning.
Good morning. Thanks for having me.
All right, Drew, let's start with those looking to renew their mortgage, fixed or variable.
Well, I mean, this is the big topic of the day, right? I mean, we're expecting a 75 basis point rate increase to prime today. Anything to do with prime operates off the variable market, so it affects variable homeowners. And then you got the fixed rates, they're over 5% right now. For us, we're still leaning toward the variable from a financial perspective. But having said that, you never really know with people's budgets. So if someone's on a fixed income or just really can't sleep at night, then they should be the ones taking a fixed.
And Drew, for those riding the roller coaster with a variable mortgage right now, is there a formula or equation for trying to figure out when to move to a fixed rate, or is that even advisable?
It's a good question. Again, it really goes back to personal circumstances. If you're on a fixed income or you just really have a tight budget, you should be converting to a fixed, even though you're going to pay a little bit higher interest than the variable today. Another strategy that we're telling clients to do is, look at what the fixed is today. It's 5% or a little bit above that. If you're at a 3.25% variable, why not call your bank or lender and actually increase your payments to what the 5% rate would be? So you'd be prepaying your mortgage a little bit, but it would actually set your payments higher, even though you're still on a variable rate payment.
Okay, Drew, let's say you are in a fixed mortgage. Some people might be enjoying a very low interest rate if they signed a few years ago. So what should they do to prepare financially for having to renew down the road?
Yeah, that's another big question. I mean, where the bond market is in 2024, 2025. I mean, some of us would like to think that, rates are going to go up this year, but the bond market may start to signal that if a small recession takes place, yields might come back down to a more normal level. People can do two options. They can kind of ride it out for the next 2 or 3 years till they're up for renewal, enjoy the savings and just, really just enjoy the lower interest cost than most people. Or they can do what's called a blend and extend. So say they're in a 2.99% mortgage, they can then blend their mortgage with the 5% mortgage today. What that does is it gives them, somewhere in the 4% for the next 5 years and kicks out their renewal down to 2027.
And Drew, lastly, before we let you go, following last month's rate announcement, Bank of Canada Governor Tiff Macklem said that the central bank may need to move more aggressively and more quickly to bring the inflation down. Do you agree with that, or will that just push us faster into a recession, even though that is forecasted for next year?
Yeah, I absolutely agree with that. They're trying to nip this inflation thing in the bud, and it's going to be hard to do, and it keeps them up at night. 75 basis points today. We're projecting another 50 to 75 by the end of the year. The positive thing about all this is that on July 4th, a lot of the market makers, their expectations shifted where they're actually seeing a rate cut in 2023. And again, that just shifted last couple of weeks. So that's a good news. So you're going to see rates go hard and fast towards the end of the year. and then we could potentially see a rate cut in 2023 based on market expectations.
Drew Donaldson, founder, CEO, and principal broker of Donaldson Capital. Thank you very much for your expertise in trying to help us ride this crazy wave.
Thank you.
Anytime.